Buckle up because the autonomous driving world is shifting into high gear. WeRide just dropped their massive WRD3 update, turning the ADAS game on its head with true multi-chip compatibility. This isn't just theory. It is already running on NVIDIA, Qualcomm, and SiEngine platforms, securing design wins across 30 different vehicle models.
Stop using your finger for notes, sketches, and edits. This Jam Jake stylus pen gives your iPad a smoother, more precise writing feel with palm rejection so your hand can rest naturally on the screen. It charges fast, works for hours, and comes with replacement tips. Perfect for school, work, or creative projects. Check the link in the comments to grab it on Amazon.
But the silicon story doesn't stop there. We are tracking a major shakeup at Qualcomm Incorporated as institutional giants like SB Asset Management are thinning out their positions. With heavy insider selling from executives like Akash J. Palkhiwala, we have to look at what this means for the stock's massive $20 billion buyback program and its future valuation. The institutional rotation is turning heads elsewhere, too. The Quent Long-Short Global Small Cap Fund just jumped into Qualcomm Incorporated with a fresh position, proving that even as some exit, others are diving deep into the wireless tech giant. We are breaking down the implications of this new move and why the hedge fund world remains so divided on the stock's long-term trajectory. Finally, M&T Bank Corp is making waves after slashing their massive Qualcomm Incorporated holding by 90%. Between these shifting institutional wins and the latest analyst ratings, it has never been more critical to stay informed on the movements that matter. Make sure to like this video, subscribe to the channel, and hit that notification bell so you never miss a beat. What if you could squeeze the brain power of a supercomputer into a fraction of the hardware cost? That is the headline-grabbing promise from WeRide today. The autonomous driving giant just unveiled their new WRD3 platform, and it is a massive play for industry dominance. We are talking about a one-stage, end-to-end ADAS solution that is no longer tied to one chip maker. It is fully compatible with NVIDIA, Qualcomm, and now, a new strategic partner, SiEngine. By making their software chip-agnostic, WeRide is essentially lowering the barrier to entry for car manufacturers everywhere. Think about the efficiency here. WeRide claims they have optimized their algorithms to achieve performance equivalent to 2,000 TOPS. That's tera operations per second, while only actually drawing 200 TOPS of real computing power. That is a tenfold jump in efficiency, and for an automaker trying to keep production costs down while hitting L2++ safety levels, that is essentially the holy grail. We have already seen this in action with the AN-N60 pre-sales, and with nearly 30 vehicle models already tapped for this tech, the momentum is undeniable. Now let's talk about the market reaction. WeRide shares dipped about 4.6% following the news, which might seem counterintuitive given the technical milestone. But looking closer, this reflects a pattern we have seen lately. The stock seems to move based on specific, headline-driven sentiment rather than broad sector trends. With 2025 revenue growing at an impressive 89% and a massive cash pile of over 7 billion RMB, the company is clearly investing for scale. The big question remains, can they bridge the gap between this rapid technological rollout and their ongoing net losses? As always, this is not financial advice, but keep your eyes on their future production wins. They are aiming to make the future of driving a lot more affordable. What do you think? Is WeRide winning the chip-agnostic race? Let me know in the comments, and don't forget to subscribe for more deep dives into the tech driving our future. Is Qualcomm a tech powerhouse on the verge of a breakthrough, or is the tide finally turning against this semiconductor giant? Today, we are breaking down the latest moves in QCOM, where institutional heavyweights are shifting their positions, and the analysts are more divided than ever. First, let's look at the institutional landscape. SB Asset Management just trimmed its stake by 3.3%, while a handful of other firms, like Waypoint Wealth Counsel and Elser Financial Planning, have been making minor adjustments to their holdings. With institutional investors holding a massive 74.35% of the stock, these shifts are worth paying attention to. But it's not just the institutions. The analysts are sending mixed signals. We have seen everything from a strong buy rating from DZ Bank to a more cautious, neutral stance from JP Morgan and BNP Paribas. Right now, the consensus sits at a hold with a target price around $158.25. So, what is the street really thinking? Inside the company, some of the top brass have been cashing out. Executive Vice Presidents Akash Palkhiwala and Heather Ace both offloaded portions of their stock earlier this year via prearranged trading plans. While insider selling can sometimes spook investors, it is common practice for executives to rebalance their portfolios, so context is key here. On the fundamental front, Qualcomm is showing strength. They beat earnings expectations with $3.50 per share, and revenue is up nearly 5% year-over-year. Plus, they are doubling down on shareholder value by initiating a massive $20 billion share buyback program, a clear signal that management believes their stock is currently undervalued. They have also bumped up the quarterly dividend to 92 cents, which keeps the yield looking attractive for income-focused investors. Whether you are looking at their dominance in Snapdragon mobile platforms or their expansion into automotive and IoT, Qualcomm remains a central player in the global tech ecosystem. But with the stock hovering between its 12-month highs and lows, you have to ask, is now the time to buy, or should you keep your powder dry? If you want to stay ahead of the curve, head over to Holdings Channel.com to track the latest hedge fund moves. And if you are looking for potential market beaters that analysts are whispering about right now, check the links in our description. Remember, the market never stops moving. Are you moving with it? Hit that subscribe button for more deep dives into the stocks shaping your portfolio, and let me know in the comments. Are you holding or folding on Qualcomm? Is Qualcomm a tech titan in the middle of a transition, or is it hitting a ceiling? Today, we are breaking down the latest moves surrounding QCOM, and the picture is definitely a mixed bag for investors. First off, big money is still finding its way into the stock. Quent Long-Short Global Small Cap Fund recently jumped in with a new position worth roughly $824,000. They aren't the only ones. A laundry list of institutional players, including Waypoint Wealth Council and Barron Wealth Management, have been incrementally bumping up their stakes. With institutional ownership sitting at a massive 74.35%, the smart money clearly maintains a vested interest here. But look under the hood, and you will see some insider caution. We have seen notable sales from Executive Vice Presidents Heather Ace and Akash Palkhiwala. While these are often pre-planned trades, seeing leadership trim their positions by double-digit percentages is something retail investors should always keep on their radar. So, why the mixed sentiment? Well, the numbers tell an interesting story. Qualcomm just crushed earnings expectations, posting $3.50 EPS against an estimated $3.38. Revenue is growing, and they are putting their money where their mouth is, launching a massive $20 billion share repurchase program. That is a clear signal from the board that they believe the stock is undervalued. Plus, they just hiked their dividend to 92 cents per share. If you are a dividend hunter, that 2.7% yield is looking pretty attractive. Despite this, Wall Street remains deeply divided. Analysts are all over the map. We are seeing everything from strong buy calls with high price targets to sell, ratings hovering around the $100 mark. The consensus? It is currently a hold with a target price of around $158. Qualcomm remains a fundamental player in the Snapdragon ecosystem and the backbone of global mobile standards. But as the market shifts, so does the outlook for these legacy tech giants. Are you holding onto your shares, or are you looking for greener pastures elsewhere? If you enjoyed this breakdown, hit that subscribe button to stay ahead of the curve. And remember, before you pull the trigger on your next trade, make sure you are doing your own deep dive, because the best investment you can make is in your own research. See you in the next one. Is the smart money losing faith in Qualcomm, or is this just a classic case of profit-taking? Today, we are breaking down a major move by M&T Bank Corp., which just slashed its stake in the semiconductor giant by a massive 90%. That is a significant exit, but it is not the whole story. While M&T is heading for the door, other institutional players are actually piling in. Smaller funds like Glass Jacobson and Richardson Financial Services have been aggressively increasing their positions. Currently, over 74% of Qualcomm is held by these big money institutions, suggesting that despite the bank's exit, the smart money remains heavily involved. Let's look at the vitals. Qualcomm is trading around $134, well off its 52-week high of over $200. With a healthy debt-to-equity ratio and a solid earnings beat reported back in February, where they cleared $3.50 per share, the company is clearly still performing. They have even bumped up their dividend to 92 cents, signaling confidence to income-focused investors. Perhaps the most interesting signal of all. A massive $20 billion share buyback program. When a company authorizes a buyback of this scale, it is usually their way of telling the market, "We think our stock is fundamentally undervalued." However, it is not all smooth sailing. We have seen some mixed signals from Wall Street analysts, with price targets fluctuating and ratings ranging from hold to neutral. We have also seen some internal movement, with key executives like EVP Heather S. Ace and EVP Akash J. Palkiwala trimming their positions earlier this year. While executive selling is common, it is always worth keeping an eye on. Ultimately, Qualcomm remains a powerhouse in the semiconductor space, but the jury is still out on where the price goes next. Are you betting on a rebound, or do you think there are better opportunities elsewhere? Make sure to hit that subscribe button for more deep dives into the stocks moving the market. And before you make your next trade, ask yourself, is your portfolio positioned for the future, or are you just holding on to the past?